Hey guys, welcome to Mr. Beefy Presents. Let's take a ride around the cryptoverse and check out some charts. But first, we gotta look at Ginsler. Those poor Smurfs. But today, Ginsler is telling any U.S. publicly traded company they better come clean if they have any crypto exposure. Yeah, good luck with that, Gargamel. Next, Chainlink staking pool opens. 170 million of Link tokens hitting community limit after 2 days. Go Link. I'm happy for these dudes because if there's ever a legit project in crypto, it's Link. Pool drawed in 24 million tokens worth 170 million. Wow, good for them. In exchanges for 4.75 annualized rewards. You know, I guess that's better than nothing, right? Even though you can get a CD, I think at like 4.88. I don't know. It's up to you. If you got a boatload of Link, it might be worth it. Grayscale Bitcoin discount widens to 50%. We're going to jump into this one too. This one could be a harbinger of things to come. All right. So with that being said, that's kind of like all the somewhat news out there today, besides SBF running around trolling people on Twitter. I still don't think that dude's going to jail. All right, let's jump into Bitcoin on the daily. So still in this range. Broke up today with the markets, which was expected. We got two different scenarios here. This could end up being a bear flag and playing out to 12.6. I don't think that's going to happen. I think we'll catch a bounce before that. I think they're going to play this thing out a little bit more before we capitulate. But if you're wanting to get in, 12 something is might be a good nibble area. 12.3. Not financial advice. Do your own research if you want to hodl. Hodl, yodel, whatever you want to do. But the markets are green today. Ooh, yeah. So let's check it out. Let's check out the S&P. Is it good? Oh, I don't think so. I don't think so. I wouldn't want to be the guys buying into this bearish retest. Look at that. Falled out, come back up. Will probably more than likely get rejected tomorrow. It could try to peak back up a little bit, but I don't think it'll close above it. And watch out below. I do think we'll take this area out. I think this is ultimately where we bottom. Around 3,300 on the S&P. I think, and we're at what? 39 right now. We may even come down to this area right here. This is like when this happens, have those alerts set up. 3,200, 3,150, somewhere around there. That one's when you get the diapers on standby. Nasdaq. Still forming a little bear flag here. I think if it breaks, I think we come down to this area. I think the bottom at 8,400, 8,500, somewhere around there. Look at the DXY. Oh, come on. Yep. getting ready. So it all depends where she goes, boys and girls. Either we're going to double top this sucker, or she's going to Jupiter. It ain't going to no moon. VIX, same. Gearing up. Let's look at Tesla real quick. Yowzer. Right there's my target. $64 make you holla. All right. Let's look at a GBTC. I thought I had it there. Let's look at this is where I think we're headed. I think this will be pretty close. So this, I think right now it's at, I think it's like $8,200 a Bitcoin right now on the trust. I think spot Bitcoin, I think we end up in that 7,500 to 9,000, 9,500 range. Look, anything in between those two, $1,000 or whatever, I don't think it's going to matter long term. So if you're in it for the long term and you're dead set on buying Bitcoin, I think you can't go wrong at that area. Let's look at ETH. It is doing the same thing, waiting on that big old fat. Oh yeah.
The Macho Man's gonna eat your ass!
Still got that $200 to $400 area. GMX. Stud Muffin. Still don't know what it's going to do. That sucker could put in a new all-time high. Let's go. ADA. Just, it's like watching. Oh, it's painful. So, my humble opinion, alts have another 50% to go. Be pretty brutal. Some have more. Just look at Near, man. That's just not cool. Not cool at all. Just sitting there hovering, just waiting. It's got plenty of room on the RSI here on the daily. I still think this target hits 33 cents. BNB. Just in case you cats missed the first one. Ooh. $46 BNB is my call. I'm sticking to it. AVAX. It's coming. 457 is my call. Which I think this is actually kind of bullish. I mean, it's hard to say it's bullish, but right, the launch here in 2020, I think that acts as support. MATIC, still, I think this is the strongest one out of the bunch. I think it will actually not retest its prior low. I think 42-cent area will hold. And if you're dead set on a project, and when we get to these areas, don't start peeing your pants. It's going to go lower. It's going to go lower. I can buy it 10 cents lower, 5 cents lower, blah, 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 blah. Right. If you do have that mindset, scale out your purchases. Say, okay, I'll do one here, one there, whatever you think it's going to go, right? If you're dead set on it, I'm not trying to shill you anything or nothing like that. I'm just saying if you're dead set on it and it gets down to that level, take advantage of it. let's see here. Economic conditions. It's going to get rough on traditional markets in the U.S. I'm not looking for some kind of 2008 housing market crash. Too many people are expecting it. Back in 2008, when I first bought my first house, I bought it mid-2008 or whatever. The market had already started crashing. Nobody expected it. Everybody was caught off guard. They didn't have time to unload it. So with the rates now, I don't see that happening. It may go down some, but the real problem is it's going to be car loans. So I was looking at some articles. What was it? Back in 2018 or 2019, the average was 11% of Americans financed a car over 72 months. And 2022, it's up to 37% of the population has financed a car over 72 months. The average car loan in 4 or 5 states were like 20% was $1,000 a month. Unsustainable, especially with high credit card debt. And I think credit card debt has hit 08 levels. So what people don't understand on car loans is local credit unions, local banks, along with the big dogs, credit card companies, that's their forte, right? JP Morgan and those guys, they don't get into car loans. Same thing with credit cards, right? It's Capital One, Wells Fargo, stuff like that, right? So if people get in a hard spot this time around, nobody's looking at credit card debt. Nobody's looking at car loans, right? Most of these banks, I've even heard 4 or 5 banks here locally that said, actually reached out to the dealerships and said, no more, we're overweight. We can't take any more car loans. So if we get into a bad economic spot, what is somebody going to do, right? If you're an everyday person and you've got a wife and a child or a spouse or whatever, and you've just got laid off, you got $1,000 a month car payment outside, you got $20,000 worth of credit card debt with 20% interest, and you've got a $180,000 home at 3% interest. What are you going to do? You're going to let the car go back? You're not going to pay your credit cards. You'll probably start paying your credit cards first, and then car loan second, right? That's going to domino effect and hit local credit unions, local banks, Capital One, Wells Fargo, and all this stuff. So I think that's your catalyst. I think the housing market, people thinking that they're going to crash 50%, 40%. I think this time around, a home, most people like in 08, man, everybody had 3 houses. It was nuts. Now everybody's got 1 house, for the most part. So I think that's going to be the catalyst. Keep an eye on stuff like Carvana, CarMax. Notice some of your dealerships locally. I say those guys will start packing it up before too long. But keep your eye on that stuff. I think that's where if the economy blows up, that's where it'll blow up at.